going to practice creating a journal entry. This exercise is pulled from our basic level ProAdvisor certification course. If you would like more information about that course, there is a link below in the description. Feel free to click on that after we do the exercise, which is over here on the right-hand side. Let's read our scenario for today. A while back, Craig purchased a truck for $13,495, which is listed as a fixed asset on the balance sheet. Upon review, Craig's accountant has told him that the truck has depreciated $5,000, so you'll need to reduce the value of the truck in the fixed asset account. Because there is no QBO transaction to accomplish this, you will need to use a journal entry. So let's see how to do this. You will need to be in the sample company to do this exercise. If you are not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link below in the description. I have the sample company pulled up here on the left-hand side of my screen. This specifically is the dashboard. So let's get started with the exercise. Now, as a note here, creating journal entries requires some knowledge of the debits and credits system of accounting. Explaining this system is beyond the scope of this exercise, but there are other resources online. We also talk about it in our advanced level ProAdvisor certification course. There will be a link below in the description if you would like more information about that. But we're just going to talk kind of an overview of how to create that journal entry itself. So first, let's take a look at how the truck appears on the balance sheet. From the left navigation bar, we're going to click on Reports, and then in the Favorites section of the Reporting Center, we're going to click Balance Sheet. Here is that left navigation bar. Here is Reports about halfway down. Click on that to get to the Reporting Center. And then in this Favorites section, you will see Balance Sheet. Go ahead and click on that to have the report run for us. Now you'll notice that the original cost of the truck is listed as a fixed asset. Here are all of the assets at the top of the balance sheet. Here is fixed assets, truck, and then the original cost at $13,495. Now we are going to reduce the value of the asset on the books here by $5,000, but we still want to remember this original cost. Now, in order to better understand this journal entry, we are going to do things in a different order than what is generally accepted in accounting. So if you are an accountant, this may hurt your brain a little bit. Please bear with me. And if you are not an accountant, it will make a little bit more sense doing it this way as we're going through. Don't worry, we will adjust the journal entry to show the correct way at the end for those of you that are accountants. So just bear with us as we're going through. It'll just help with explaining a little bit more. Now, the value of the depreciation is going to be recorded in two places. First, the total value of the truck will be reduced. Remember, we want to remember this original cost, this $13,495, so we don't want to adjust that specifically. Instead, we're going to track the depreciation in a sub-account of the truck asset so that they stay together on the balance sheet. And we'll rerun the report at the end of this exercise after we've created the journal entry so you can see how it will look. So to get started with that journal entry, we're going to click on Accountant Tools and then select Journal Entries. Accountant Tools is right here at the top of the sample company. Click on that and then under Quick Links, select Journal Entries. Now on the first line under Account, we're going to select Depreciation. Click into that box right there and then go ahead and start typing in depreciation so it's easier to find. You will see two show up here. We want the one that is the sub account of the truck. Remember, we are using this one to track the value, the total value of the truck is needing to be reduced. So that is how we are going to track it so that we don't adjust that original cost. So go ahead and click on the one that says a sub account of truck. Now, fixed assets are debits. That means that if you want the number to go down, you have to enter it as a credit. Now, if this doesn't make any sense to you, don't worry. Debits and credits are, as I mentioned, outside of the scope of this particular exercise, and it's not part of that basic level ProAdvisor certification course test, or not course, the test itself. So don't panic if that is what you are studying for. That is not, more information about that is not necessary to pass the test. But if you would like to learn more about debits and credits, it is in our advanced level ProAdvisor ProAdvisor certification course and part of that test. So you would want to take a look at that. There is a link below in the description, or if you have the exercise pulled up, you can go ahead and click on that little link right there that says here. Let's continue with creating that journal entry. In the credits field, we're going to type 5,000. Go ahead and do that. And then in the description field, let's go ahead and type annual depreciation. Annual depreciation. There it is. Have it typed in right there. And that line looks good. You have now taken money out of that fixed asset, the truck, but where did the money go? So the amount of depreciation is the amount of that asset that the business used during the year. So it is now considered an expense. So now we need to debit the expense account, which is in the sample company called depreciation. So just to review here, we have now taken money with this particular line. We have credited, remember, it is removing, it is lowering down, it is removing that value of $5,000 from the truck. And so we need to have it balanced here in a debit side, and the debit is an expense. So because we have used that value, that $5,000 over the year, it now needs to be considered an expense to the business, and that is what this second line will be about. So in that second line, let's go ahead in the account field, type or select depreciation, click into it and type in depreciation so it shows up. Now again, this is an expense. So we want the one that is an other expense type of account. Click on that one. And you will notice that once you do that, QBO automatically filled in the amount of the debit right here as well as the description. And that is because the debits and the credits always have to equal each other on the journal entry. If they don't equal, it will not save. You have to, whether it's a very complicated journal entry or something very, very simple where you have the two lines and they absolutely equal each other, it always has to be debits and credits equaling each other. Now, as I mentioned before, we were gonna fix this journal entry because if you are an accountant or have studied accounting, then your heart may be racing a little bit because the debits should always be listed first before the credits in journal entries. That's just the rule. QBO does not care what order that you put them in as long as they balance, which is why we were able to do it this way. But you can easily move the rows so that it is absolutely correct. And the way to do that is you want to click on the dots in the first column and drag the first row beneath the second so the depreciation is on the first one, and then the truck depreciation is on the second line. As a note here, though, you need to make sure that you click out of that second line so that the column shows dots on both lines, not this plus green, or not the green plus arrow, because otherwise what you're going to do is just add rows together. So make sure you click out of it anywhere, doesn't matter, anywhere out of that so that you see dots on both of those, and then take the dots, click down on it, hold it on your mouse, and then drag it down until you see that green arrow on the top corner of what you are dragging, and then release your mouse. And now you can see that depreciation, the debits, is listed first before the credits. We're going to click on the down arrow next to save and new and then click save and close. So go ahead and click on that down arrow, select save and close, and now the journal entry has been saved. So now let's look at the balance sheet again. After saving the journal entry, the balance sheet will update for us. Now you'll notice that the original cost and the depreciation are reflected on the truck asset. This is exactly how we wanted to show it. We wanted to show the depreciation on a separate line than the original cost. And now you can see the total truck amount, that value that it's showing is $8,495 because we have reduced on the books the original cost by $5,000 because of that depreciation. Now, finally, let's see how this is reflected in the profit and loss report. Let's go back to the reporting center by clicking on the report list, or click on back to report list and then click on profit and loss to run that report. So if you scroll back up to the top here, there is this little blue wording that says back to report list. Click on that. So you go back to the reporting center, and this time we want to run the profit and loss report. So go ahead and click on that one. Now you want to scroll to the bottom to see depreciation is listed under other expenses. If you see down here, you have the income and then the expenses. Here under other expenses is the depreciation, that $5,000 that was pulled from the business. And so that is why it is showing right there. And that is it. That is how you would create a journal entry. Now, if you like this exercise or you want to learn more about the basic level ProAdvisor certification course, be sure to click on the link below in the description, and I will see you in the next exercise.